Ladies and gentlemen of the crypto space, we're live at 11:35 a.m. on a Wednesday, March 31st. I'm going to have to run this stream a little bit short today. Got to jump off promptly at 12 noon. I got a meeting to attend. Ever relevant topic, and I'm going to try and focus on what I'm doing and why I'm doing it, and adjustments I've made. And we're always dealing with risk because if you do nothing, there's risk. It's not risk. It's worse than risk. It's a guaranteed. If you're banking and you got cash, you're losing. 100% guaranteed, no questions asked. Savers are losers, unfortunately, as Robert Kiyosaki so harshly says. But it's the truth. If you're losing 15% of your money on a yearly basis, what's the point of even saving money? Not getting anywhere. So we are forced to take risk. And you're going to put it into 1,000 to 1 P&E inflated equity. It's not a bubble. It's beyond the bubble. It's just a disturbing instrument that when people think crypto is valueless. You're talking about a stock that is worth 1,000 times more than the earnings of a share of a company. What a ridiculous reality. I have no value applied to any of that garbage. And unfortunately, that garbage, those assets, are literally like Tesla, Microsoft, Apple. What garbage? The companies are wonderful. I love the companies, love Tesla. Apple products are off the hook. Microsoft products are wonderful. I worked for Microsoft for a fair amount of time, but their equity assets are absolute trash. They're useless. They're worthless. They don't mean anything. So I find much more meaning, thus value, in these products that have emerged in the DeFi space, maybe because I'm an engineer and I understand how they function. And I appreciate the software development that goes into them. So I understand how they work from both a financial as well as a technical standpoint. To me, they have much more meaning. And folks like Chris Black are screaming risk, risk. Oh, House of Cards. No, it's not a house of cards. These people literally aren't engineers. They must have no technical software knowledge whatsoever. If anything, I made the analogy shortly ago to a friend. It's more like a concrete house that's still moist. It's still wet. It's not solidified. Well, this is the furthest thing from a house of cards. These are products that are powerful, that they execute sophisticated algorithms and sequences of transactions that are auto rebalancing. This is powerful technology, and it's downright insulting for people to even remotely reference a house of cards unless a product is actually a house of cards, in which case there's products that are houses of cards. But when you're talking about a smart contract that's automatically balancing a pool and automatically rebalancing principal components based on whatever weighting or price or so on and so forth, that's some awesome technology. Awesome. Or products like Yearn that are taking incentivized yield and liquidating it to accumulate more principal. Come on. That's automation. Automation is powerful. You're going to watch over the next 10 years the entire retail sector of our business world completely be automated. People are screaming automation is risky and DeFi, yet we're going to have robots all over the place in the next 10 years. You think you're going to go into a fast food restaurant in the next 10 years and you're going to see people cooking? When you could have a robot that works 24 hours a day, requires zero health insurance, and has zero morale requirements. And if you think for a second that that isn't going to happen, that's going to save a fortune. That's going to increase profits. That's going to decrease risk. It's going to eliminate, well, not eliminate, but substantially eliminate insurance requirements. It's not insurance, health insurance. It's malfunction and more like a property type insurance on the piece of equipment. Folks screaming risk in the DeFi space. It's the most profound opportunity I've seen in my entire life. So I have applied value accordingly in a very risk considerate fashion. The only thing that's missing in the DeFi space, the only problem with the DeFi space isn't risk, it's risk management. People just need to know how much damn risk they're taking. Anyway, that's my opening monologue. What's Noah up to today? How am I thinking of risk? That's how I'm thinking about risk and what I'm up to. Let's get it going. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam, let's pop it over to the main screen and see who's in the stream. We got Tyler K in the house, Mr. Weeby, always a pleasure. DeFi Oracle, I got ideas, and I share my ideas. There's a lot of brilliant people out there, and not everyone shares their ideas. I find it enjoyable to talk, and I hope I help. Good day to us exploring the future of finance, the future of France. You got to love the DeFi lingo, so to speak. 13 people in the stream, 6 likes. We can do better. I got up on the screen Ethereum on the 4-hour. This thing looks absolutely incredible. It looks like I'm not a betting man, but I've leveraged into Ethereum. I've said over the past several streams that I didn't have much of an Ethereum position, but I've leveraged in to 10% of the portfolio. That's a relatively large position, actually, all things considered, the way I talk about position sizing. But this is a DeFi macro. This is a macro crypto asset. Bitcoin's sitting at about 25% of the portfolio, and now Ethereum's about 10% of the portfolio. Look at the MACD. It looks like it's about to skip off the signal. Look at the RSI. Is that not a bullish trajectory? And look at that Stoke. That's a rounding bottom way above oversold territory. Screams bullish. Let's take a look at the longer time frame. RSI is overbought. Stoke RSI is overbought. RSI is in good territory. When bullish activity happens, Stoke becomes really irrelevant, and you'll just see it riding along 100. And RSI has significant room to move to the upside. It's not even above. It's halfway through the field. Bullish signal cross. We just had a bullish signal cross on the MACD. And what do we got? 8 hours left in the daily, and look at that candle print. That's a heck of a candle print. That is a heck of a bullish candle print, in my opinion. Not the best of technicals, but that looks really good to me. And then you go out longer term, and RSI looks primed. Stoke completely oversold. That's wonderful. And MACD looks decent. Monthly RSI is good for a big rip to the upside. It's not at 100. Not at 100. Stoke obviously is overbought. That'll just ride the top. Stoke isn't always the most meaningful, but it's nice to see. Every piece of additional data makes a difference. But I go back to the 4-hour. I'm watching this. I don't know if it breaks out. I'm not going to buy more. I think I have a good position size at the moment, earning 30% in curve. All right, let's keep it going. Derek's in the house. Always a pleasure. Captain Weber, yes. We're talking about a couple of moves that I made. I mentioned I leveraged into Ethereum, 10% of the portfolio. I'd be tempted to do more. I'll keep going. I did a couple of things today. Morgan and Felipe da Silva Lucas. Any gems to rip? 20 or 30%? I don't do gems, boys and girls. Okay, well, I'll get to what I did. Morning, Noah, John McGuire. Alpha Tokenomics now live. Thoughts? Alpha, yes. Tokenomics are all right. I like them. I love Alpha. Alpha's great. It's kind of like right in the middle of full risk on and risk off, and it's leverage. So those pools, V1 pools, are really cool. When the V2 pools come back online, like a 3 curve leverage position, that's awesome. Get like 100% on 3 curve, not even going max. Or if you have your alpha, you could take some extra leverage. It's so cool. That's some cool tech. That's DeFi. That's some cool software. You're buying a single asset, taking a single position that does a relatively sophisticated um, uh, position implementation. That's awesome. That's awesome. Oh, yeah, I see what you're saying. You can't see my whole screen. Yeah, sorry guys. I have to adjust. I adjusted my monitor resolution, which is actually producing better performance. But tomorrow I'll fix that. I have to adjust my OBS settings. At least you see my pretty face. So here, let me move it over. There we go. You'll see where Ethereum is. It looks good. Ethereum looks great. 1842 writing right below resistance. I'll go over Ethereum tomorrow. Maybe we'll have it broken out by then. Oh, look, I still didn't move over enough. It's really clipping a lot. Sorry, guys. Not a big deal. It looks good, suffice it to say. Let's keep it going. Um, Lewis, I cannot understand why crypto is correlated to legacy market movement. It's simply a matter of people losing money in the stock market means less fiat to pump into crypto. I mean, listen, psychology and emotions are all going to be related. If there's fear in the legacy financial system, there'll be fear in the crypto space. In the macro financial, treasuries and the dollar movement and forex, um, that's it pushes around the markets like a wrecking ball. It doesn't matter what market because everything's denominated in dollars. Everything, dollars king. The world runs on dollars. Even crypto runs on dollars. Doesn't matter what people want to think about living their life in another denomination. It's dollars. So that's why it's all affected and all related. It's interesting when you see the inverse correlation between the crypto space and the equities market, where equities are flat and then crypto's just ripping. We could see breakouts like that. It's a speculation. There's no assuredness that that's going to occur, but we are always fascinated with the divergence occurring, where it means that crypto is more meaningful than legacy equities and legacy markets. I have my hopes as well. Do I bet on them? I mean, technically, since I'm applying value to these markets, I have my bets. I do bet. But I also have my risk off. I'm about 25, 30% in dollars. But what's fascinating is risk off in the crypto space, throwing those dollars in the curve. You're getting 30 to 40% on your money. Maybe I'm about 40% on average, I believe, at this point. So I did a lot of YLA and power index staking. I have a decent power index position, small relative to my other risk on positions, but I got a lot of staking yield. Um, and I bought, so I had to buy in order to boost my incentivized staking. So my position right now is 0.2% of the portfolio. It's just a large position. I have a bunch of assets in this position sizing. Um, it's not large, obviously, but I think it 10x, 100x on your money, and I got to turn 10 grand into 100 grand into 200 grand. Come on, these are the types of positions I love. So I've exited my YLA position. I'll explain why. YLA is great if you want to compound dollars, but I'm actually feeling quite bullish about Curve. I mean, look at Ethereum about the rip. That looks so cool right there, pushing up against trend resistance. Oh wait, you guys don't see it. Here, look. I'll move it over completely. Um, so YLA is automatically applying value to Yearn pools, and Yearn is automatically compounding curve pools. So for me, I wanted the incentivized yield. I think YLA might be the most awesome DeFi product I could think of at this point. But I don't want the dollar yield. I want the curve emissions. So as I liquidate this YLA to get the dollars out, I'm going to bump up my curve. So I have a large curve position. My curve position is 18%, 16% of the portfolio, something like that. 10%, 10%. No, I'm sorry, 8% of the portfolio. So I think I'm going to bump up the curve position to 10% of the portfolio. And I didn't have the vast majority of my dollars in YLA. Bear in mind, I had the dollars paired with USDC in sushi, which was staking and power index. So I took those dollars that I was pairing, the USDC that I was pairing with YLA, and it's all in curve. So I'm going to bump up the curve position. And what I'm thinking about is whether, so I have about 90 grand remaining that will liquidate from Power Index. Let me see if you guys see this screen. You should. Um, in 3 hours, because that's the way this liquidation process works. It waits to accumulate 500,000 or a 24-hour clock. Excellent. You guys really don't see anything with this screen resolution. Maybe that'll help. So about 3 hours remaining, and I'll get some cash. I'm contemplating whether to put more into Ethereum or just get to the. You guys still don't see that? Yeah, you see something. I just saw the screen updating. It's delayed. There's a broadcast transmission delay. So I wait 3 hours, get some cash. So I'm thinking whether to put it into some of it into Ethereum. I wouldn't put all of it. Some of it's going into Curve. And the question is how much goes into dollars versus Ethereum, really? I know I want to bump the Curve position to 10% of the portfolio. But in any case, big bullish on Curve at the moment. I mean, that 4-year lock. And I did a Twitter poll a little earlier about how much they're going to be making transaction wise per day in the coming years. We're talking years, boys and girls. It could just be enormous, and it's a heck of a profit sharing position, VECRV, which means you actually have to have the VECRV. If you have YVECRV, it's auto compounding. Or if you have YLA, that's auto compounding on the urn pool. So you're not getting the curve. You're not getting the curve emissions. If you have VECRV, you're going to be getting your weekly dollars, which are three CRV emissions from the profit sharing, and you're also getting your incentivized returns, which are denominated in CRV. So you get these wonderful wrapper derivative assets, but they're designed to automate the management of the underlying components, which for myself, as I guess a power DeFi user, I want control over. And at this point, I've determined I'd rather have the CRV emissions. This is the coolest damn protocol. This entire power index is so cool. It's just DeFi automation is such a cool concept. It's tantalizing. So this is why I've retained my um, what's the token? That's why I retained my CVP, concentrated voting power, which is the power index DAO asset. I got a nice position. It's one of the largest DAO asset positions I have. All right, I got a couple minutes left. Let me get through the stream. Can't see your whole chart. Sorry, guys. I'll fix that tomorrow. Can I understand? I hit you, Lewis, my man. Montana means when shit hits the fan, people sell everything. Yeah, they pretty much do. Risk spreads quick, which is why dollars are everything. And you could get 40%, 50% of your money from Curve. That's crazy. That's crazy. Governance tokens, your governance tokens are worth nothing. Just buy sushi and you participate from the fees. Okay. Sounds interesting. Sushi, X sushi I've talked about quite often. Yeah, sushi has a position on my mind. I've thought about it quite a bunch. I don't have a position currently. I lean to other AMMs that make me feel uh, more bullish at the moment. That's true, Montana. I guess it's just emotional of me to desire crypto to be decoupled and standalone, so to speak. I guess I have to go back to sleep and continue my dreaming. It's not dreaming, Lewis. I think the market will seek out better products, and these are better products. These DeFi products, they're far superior, easier to interact with. You have complete control and custody. Economical transaction fees are either coming, fine. You want to operate on BSC, go at it. I mean, Eclipse is crazy. This thing is just printing money. It's like $400 a day. It's printing for me, and I didn't spend a dollar. It's just literally printing it. At 1,500 EPS staking at 2,400%. Oh my goodness. Oh, you guys didn't see it. Sorry, because the screen is all messed up. But what's the lip? Oh my God, uh, Ellipsis is at $5.67. All right, Curve. You and whatever Ellipsis, when you're not related, but Ellipsis is literally printing a fortune. That's crazy. It's been 567. That's crazy. And Ellipsis, here, I'll show you guys. 1,500. This is all free. I didn't spend $1 on this. That's crazy. That's so cool. Mr. Weeby, Rune USDT pool on BEP swap 50% with identical bank. Okay. Rune is cool. Rune has that Ren Chaosnet type feel until it gets critical mass and more traction. I don't have any value applied to Rune. We can't hold everything we want to own. Mr. Weeby, gov tokens are worthless without a good monetary policy. Yeah, and governance tokens are actually dangerous without a good monetary policy. They're inflationary. Most are, some have fixed supply and are like 100% in circulation. But most have emissions because the whole point of governance tokens is nowadays it's incentives. So the governance tokens usually have like either an inflationary or a decaying inflationary component to the monetary policy. So frankly, gov tokens are very dangerous unless they have a deflationary component or incentivized supply disruption component. Um, Preferably a decreasing supply, which is deflation. Otherwise, you're risking either inflation or decaying inflation, which will trigger pretty much constant, if not aggressive, depreciation. White Wolf, so do you single assets and multi assets on your YLA deposit? Single. If you're going to use YLA, you're going to zap it in. You zap, zap, zap. You go here, you go to overview. You zap. You take USDC and you zap it in. What's the point of getting the individual assets? That's a hot mess. Zap, zap, zap. I don't know if you guys see it. The screen's all messed up inside. Sorry. Here. Zappy, zappy, zappy. That's the way you do it. Crypto, no, you just keep staking, right? Compounding your position. VE curved VE curve, which is producing dollars from the weekly profit sharing, and it's also bumping up the incentivized yields, so I could actually put in more dollars into various pool positions. Candid money makes me happy. Yield makes me happy. Managed risk adjusted returns make me happy, and insurance makes me happy. I like having insurance. So I have large curve position. All right, if there's an issue, there's insurance. One, and that covers the contracts. And two, I'm not worried about USDC, DAI, or Tether at this point. I think they're all fine. And Tether doesn't bother me at all. I know they're working with euro dollars. It's not fractional reserve, but they basically, Aave has, you can take WBTC and collateralize it for DAI. So if Tether's accepting like a car or a house as collateral for for Tether, is value. There's value there. There's no reason you can't operate a business like that. And if the value decreases too much, they liquidate it. They sell it, and basically that's the way Aave operates. So, at worst case, literally they're operating like Eurodollar system and shadow banks. That's clearly how the entire legacy financial system functioned for the better part of God knows how long. So I got no qualms whatsoever with the way Tether's operating. I don't think there's anything horrible. Not too worried at all. Gotta love the armor staking, right? I mean, look at this. This thing's just cranking out cash while I am protected. So this is all going into Bancor. I'm going to let it accumulate because the Bancor contracts are pricey once I get a couple thousand. So I just keep bumping this up. I mean, the insurance is expensive. I got more than this. So I'm gonna have to bump up this insurance. And you talk about like 1.2 Ethereum a month, talking like $2,000 a month insurance at this point. One last question. I got to wrap up the stream. Any thoughts on DAI losing its peg? Well, of the many DeFi protocols, DAI lasted and MakerDAO lasted handled the March 2020 liquidity event quite well, and they have a protocol and a process in place to handle the peg. Not too worried personally. There's plenty of risk in the DeFi space, and I am an extremely risk averse person. I have insurance. I don't ape into things. I buy nothing on Uniswap unless it's actually substantiated and has critical mass. I'm late entrance. I wait for value to go up. I wait for appreciation prior to taking a position. I am risk adverse. I'm just saying. I mean, you got these people screaming there's risk in the DeFi space. Sure. But what you need is an engineering mindset, a technical understanding of these protocols, a comprehensive process for risk analysis, and you need to manage your damn risk, which is exactly why I do my stream, to convey this content and the ideas that I see and the way I approach these markets. How do you treat, last two questions, I got to jump. How do you treat FUSDC LP when totaling your exposure? You divide the amount in half? Yeah, it's hard to keep track of valuation. I use Delta, and I just throw both of them in there. But I love FUSDC positions. Not right now, because I'm seeing bullishness. I'm expecting Ethereum and Bitcoin to outperform the world. So I'm risk on. I'm very rarely risk on, but I have very large risk on positions with Ethereum and Bitcoin at this point. But when I sense more risk in the markets, I'm much more interested in an Ethereum USDC position to manage the downside volatility. You spent 1.2 Ethereum a month for insurance? This is insane. I mean, yeah, I guess. It's insurance. You gotta protect your McNuggets. I mean, this is not this. I know it's large for many a persons, and I appreciate that, and I'm humbled by it, and humbled that people think it's a large number, and I know it is. But I know we follow some big accounts, boys and girls. We follow 0xB1 that has $750 million, and we've studied that on Zapper We've seen what they're invested in. Here, Zapper. Might not load. You go up here. You go to 0xB1. I mean, look at this account, boys and girls. I gotta jump off. But this is a DeFi account. Look at this account. It just keeps going up. It's gonna take a while to load. This boy has about $750 million. 645 it's up to. I might keep going. It should keep going. $645 million. Incredible. So, yeah, I'm kind of negligible. I kind of don't exist relative to this account. Assets $794 million and $150 million in debt. It's all relative, my friend. Mr. Weeby, pretty sure if you had Noah Stack, you'd think differently. You always insure. Always, I definitely gonna. I'm risk adverse, boys and girls. All right, let me wrap it up. 12:03 p.m. Wednesday, March 31st. We got 31 people in the stream, 17 likes. We can do better. I thank everyone for joining. Please tell everyone to subscribe, and I will see you all tomorrow. Peace.